Traders, I'm looking at gold. We are on a daily chart. See where this is traded to. You want to be careful up at this level. Just mark up that high. Daily. Yeah, yellow. Okay, yellow color is daily. It's basically reached into buy stops sitting up in here. You can see the reaction. Traded into it. Okay, so we've got a bit of a bearish thing going on. But this is a huge level. There would be a considerable amount of buy stop orders in the order book at this level prior to this move and this move. Well, on the back of these two moves here, okay, it's traded back into it. It's taken out this level, and oh look, it could push forward, but it could also pull back with a vengeance as well. Don't underestimate how far this thing can move. I mean, look at these pullbacks. So something like that wouldn't be out of the question. I wouldn't want to be buying into this level, to be honest. It's overextended. So let's just go down to the 4H, have a look at it from this perspective. Now, there's a couple of things here. We've got this green candle, bullish imbalance. So it's one-way trading, bullish, and it's a potential target for this to pull back down into, pretty much, looking to rebalance. Just got to look at this from a liquidity standpoint. It's going to be reaching for liquidity. The market is always reaching for liquidity. So this liquidity target has been already reached into. Now, it may or may not have cleaned out everything, right? So there could be another level up here where this could look to target. That could be a range, a little bit of a dip down, and it pulls up into this level. Okay, that's a possibility. Again, I don't want to be buying at this level. I'm always looking at the previous value area. All right, that's it there. This is where this move originated in terms of the accumulation in this value range, right? Yeah, I mean, you can see it. Look, significant range all through here. I'm always looking at the price swing between these levels. So we have the price swing from this low to high. I really don't want to get involved unless I see this pullback. Or I could, if it holds here and we see the breakout, I could trade the breakout. All right, so that's a potential entry if that plays out. But at the moment, if this doesn't play out, then I'm going to be looking for the move, and you want to grab the Fibonacci low to high. I'm always looking for the 50% of the previous swing as my point of interest, and I'm going to be looking to enter. You can see the red and the blue zone here, 50 to 61.8. That's my preferred entry point. Right, so if this starts to retrace, I will look to enter long around this level. And again, if it breaks, then that could be a thing. Yeah, and look, if it trades back down into this level here, you want to wait for, okay, lower highs, lower lows, the range, a move to entice buyers in, a move to take their stops, trades off with speed, creating an imbalance, returns to rebalance, okay, and then off we go. Right, so there's two potential scenarios with this. Now this could occur here, it could occur here, it could occur further down. It could occur under here. It could take out the liquidity under this range down in here. You know, what you're essentially looking for, and what I mean by that is, you know, it trades back down and it hits these sell stops under here, right? So that's a possibility. So understand that this could occur anywhere. It could happen here, it could happen up here. I guess the takeaway from this is we're looking for the rotation. If it does trade down, we're looking for this to rotate, and the opportunity will be on the break, retest and fail of this range. Break of market structure bullish, BOS, and that's your a potential entry point there. All right, not an easy gig trading gold at the moment, guys. Now, you know, I mean, look, the markets are fairly precarious at the moment. You know, the Japanese lifted their rates, causing chaos and mayhem in the markets. We've had stock markets crash and then a bit of a rally, and I don't know whether that rally is sustainable. Now, we've had the rally last week into Friday, through Monday and Tuesday. Be careful, guys. We've seen in the last 2 weeks, Wednesday, Thursday, we've seen the markets turn around in a big way. So just watch out. You know, I mean, look, generally with a trend, you're going to find that the market will trend during the week. Right? Generally, you'll get the volatility. Let's just grab a thing here. Here's a typical weekly candle. Let's just call it a bullish trend. We're looking at Friday and Monday, where if it's bullish, the market, closes, and then you see it wick down into, like, we're talking a bullish trend here. We could just copy this, copy and paste that, place that here. So there's a bullish week. We get the end of a week, and Friday we see it hit liquidity above, pulls back. Friday, Monday, the next week opens, and then we get that, okay, a dip into liquidity, and then we see the trend for the week. So I'm just talking these strong bullish candles, okay. I know we get all sorts of in between these things, right? So there's dojis and candles that sort of don't really go where we really want them to go. But I guess what I'm getting at is this usually occurs at the end of the week and through the weekend, then into the coming week, right? More often than not. In the last couple of weeks, and like when the Japanese, the Bank of Japan lifted their rates, that was midweek, Wednesday, Thursday, out of nowhere. The markets shifted gears and tanked, right? Really out of character. And that threw a lot of traders, because generally I'm looking for an opportunity. Friday, Monday, I'm looking for, the trend to kind of settle in Monday, Tuesday, and then we trade that trend through the week, right? But yeah, last 2 weeks have been horrendous for everybody. So very volatile and unpredictable market. So here we are now. We're heading into, what is it? Well, it's early in the week, right? But just understand that the markets are behaving fairly erratically. There's a lot of fear in the markets. You look at the fear index, it's sky high at the moment. So be super careful, trade conservatively. We could see these things turn around midweek, and here we are. Tuesday, it wouldn't surprise me, Tuesday, Wednesday, we see this thing tank. I'm not predicting anything, but just be aware that that's a probability, possibility it doesn't. But yeah, I think there's a definite argument for this thing to turn around. Given that it's trading into a big level, you can see we went out on the higher time frame, right? I'm not going to ramble on any longer, but look at this level, right? So I'm expecting possibly a deeper pullback. Don't buy into this at the moment. I would be waiting for that. If that plays out, I'll take a trade down in here. But you got to wait for the setup. You want this rotation and then the breakout north. Okay, guys, I would love to hear your thoughts on this. Definitely leave a comment below. Share the love. Your thoughts matter. And with that, I hope you have a great day. Safe trading, and we'll see you in the next video.